I imagine the one screaming at the start of the year that the market is going to collapse any second now, starting to lose a voice. The poor buggers really can't catch a break, can they? Surely the stock market is due to collapse any second now, right? Well, for the time being, it's another new month and another new all-time high. I'm not going to lie, I could get used to this. But all jokes aside, what you could really do is sitting down and talking about market valuations, inflation, and then discuss who are the real winners and losers in the market right now. With the main questions being, should you be worried? Then also, should I be worried? I'll discuss these points shortly. As always, I'm going to show you how my Vanguard portfolio has performed over the last 30 days as it rides the waves of the stock market. Hang on, did I say waves? I meant to say bubble. Alongside my thoughts on where I think we're at in the market right now and what I'm planning to do about it. But before we get into the video, I do have an announcement to make. I want to say a massive thank you and give a massive shout out to my first Patreon, Rob Summerfield. We've spent several weeks chatting the world away in Discord and he's given me plenty of ideas for content coming the next few months. But you need to be aware that Rob is currently 100% of my Patreon support at the moment, so if there's any content you don't like in the future, then you've really got to blame Rob, okay? Actually, I'm only kidding, Rob, don't worry about it. I'm really grateful for your support. If you're interested in joining, there'll be a link in the description. Right, let's start out by talking about the bubble in the room. Wherever you look, asset prices are increasing. It doesn't matter if it's the FTSE 250, the S&P 500, house prices, or even the crypto market. Everything is up. But not only is it up, but it's up after a very aggressive growth since the bottom last year in March 2020. If you don't believe me, then feel free to check out my full investment portfolio. I'll put a link in the top right hand corner. Believe me, everything is up. The only broad index I can find which is down is the TOPIX, which is spelled TOPIX, which is the main index of the Tokyo Stock Exchange. But then again, let's be honest here, Japan's economy died about 20 years ago. I'm not exactly sure why I'm expecting a dead horse to suddenly jump up and spring into life all of a sudden. But if you're interested in why Japan's economy has pretty much died, or at least one of the key reasons why it's died, I actually have a video coming out in the next week referencing the year 2049. Keep an eye out for it. It is actually a really interesting subject. I really enjoyed writing the script and recording it. Anyway, it's easy to point out and jeer that we're in a stock market bubble right now. You hear all the comments all the time at the moment, such as the market is overvalued and the bubble is about to burst any second now. But have you noticed one thing about these people? They're really confident on these facts, but they're not selling a single thing. I'm yet to see one analyst, one YouTube, or anyone for that fact actually sell anything at the moment, let alone sell their full portfolio. So if we're so obviously in a bubble, why is nobody selling? Well, it's actually fairly simple. It's a fact that we know that on balance, we're most likely going to be far worse off if we hold our assets in cash right now. There's no other explanation for it. Next time someone says we're in a bubble, just call them out and tell them to sell if their conviction is that strong. Believe me, they won't. As creating hysteria is a lot more fun than putting your neck on the line. The losers in the market right now are the ones that have been holding cash for the last 6 months. God knows how much value the currency they're holding has declined over the last few months in terms of purchasing power. And then on the flip side, the winners are anybody that's held assets during the last 6 months. All that brand new money flowing into the market is going straight into asset prices, so you've probably really benefited if you do. You might argue that the growth we're seeing right now is purely inflationary, but there's no denying the fact you're getting richer compared to the people who aren't holding assets. There's actually another benefit to all the money printing at the moment, and it's to do with your houses, especially if you've got a mortgage. If you hold an asset which is highly leveraged, so again, a house with a mortgage, let's say you've got an outstanding debt of £200,000. Well, the outstanding £200,000 just got a hell of a lot easier to pay off as the burden is relatively less due to the excess money printing. The government is basically printing you into a free house, so it's not too bad. So how can we look at the market at this time objectively? Well, let's do all ourselves a favour and just agree one thing, just for this conversation at least, that the market is currently overvalued. And what I mean by that is that in the long term, today's PE ratios on average across the markets are going to be above the long-term average. If you look at one of my favourite websites, currentmarketvaluations.com, the vast majority of indicators show this. Some even put current market valuations over that of the stock market bubble in 2000s, which I actually find quite surprising. So if we can agree on this, then the next logical question is, why? Why does money continue to flow into the markets, then for so little money to actually flow into these businesses that the investors are investing into? Why are people paying more money for less earnings? Well, I think the answer is pretty obvious actually. It's widely known that governments around the world are printing money at speeds and quantities that we've never seen before. So once some of this printed money falls into your hands, it becomes a real-life version of the child's game, hot potato. The longer you hold on to it, the hotter it burns in terms of its losing its value over time. The only way to stop the burning sensation is to buy an asset with it. So the FTSE 250, S&P 500, Dogecoin, GameStop, God, give me anything. Well, except for the Tokyo Stock Exchange, because, that dead horse does smell. I don't know about you personally, but I've never known so many people around me have so much money in their pockets. Family members, friends, other people I know. This is probably mainly down to them not going on holiday at the moment, but even then, there's a lot of money sloshing around. So the question now is, when does this party stop? At what point do governments around the world feel confident enough to stop printing money, which will withdraw the support for the asset prices that we're currently seeing in the market? Well, nobody knows, and for that exact reason, no one wants to sell the position. We all know the stock market is overvalued since probably about winter last year, if not beforehand. But if you'd made the move to sell your position back then the impact would have been double whammy today. Just look at this for an example. The S&P 500 is up more than 23% since the 1st of October last year, which is actually pretty representative of all asset classes since then. So any cash you'd got in your pockets has obviously missed out on that growth, but then equally it's been eaten away by inflation. That's a lot of hot potatoes in your hand, so that is a bit of a sucker. Even if the market sold off 20% right now, you'd be no worse off than if you'd sold out back in October. Well, actually, there's one thing I'm forgetting about. You actually would be worse off because you missed out on dividends from Q4 last year and Q1 this year. And that's even if the market sells off right now. It could rip another 10% higher. You might say I'm foolish for thinking so, but you never know with these things. Anyway, that's enough of the markets right now. I'd really like to hear your thoughts, so let me know. But just before we jump into my portfolio update, if you look down below this video and look at the thumbs up button, just by clicking it, you can turn it into a Smurf. And I'd be really grateful if you did, because it really helps out the channel. But if you think you're smart and decide to turn the thumbs down button into a Smurf, then you need to be aware of just one thing. Smurfs sadly die if you hold them upside down for 5 seconds. So if you decide to do that, it's blood on your hands, not mine, you murderer. So, as a quick recap for any new viewers to my channel, my fund of choice is a FTSE All-World UCITS ETF, better known as VWRL. If you want to know more about why I picked that, then there should be a ribbon in the top right now. And I've been buying into this ever since January 2018. I think that pretty much covers everything you need to know. So last month we were sat very close to an all new time high at £81.06 for VWRL. Weirdly, I can actually remember the point where I was nervous of buying anything over £63 during my first year, and I'm having the similar feelings at buying anything over 80. But then again, in 3 years, I'm sure I feel differently about it. In terms of where my account was at, I'd just broken the £53,000 mark for the first time, which was a really nice surprise. As previous to this, I'd been bouncing around the £49,000, £52,000 mark for quite a few months. The most frustrating part of this was that I was only £400 off £10,000 in market gains, which would be a really nice barrier to break through. So, where has VWRL traced this month? We were settled, as said, not far above the £81 mark, and for the millionth time in the last 6 months, it set a new all-time high. So, surely it couldn't do this again, right? Hell no. In the following 2 weeks, it ripped another 4.5% higher. If you're new to investing, then this sort of move from a broad global index is insane. Especially when you factor in the fact that we're still 13% higher than we were at the start of 2020 with the pandemic in the middle. So this goes back to my conversation of bubbles and inflation. But you've got to be in it to win it. And I'm in it this month, so I've won it. As it stands, the share price has dropped a little bit down to 83.79, but this has broken above the £84 mark during this month twice. This huge move has moved my account up to £56,474. I have to say, when I started my investing journey, I was just thrilled to see £100 gain every now and then, let alone £1,000 or even several £1,000s in 1 month. For several months, my account has been teasing me with this 5-figure gain by slipping above and below the £10,000 mark, and my profits stand at £12,162, meaning that my profits have grown by £15,000 in the last 13 months, so that's like gaining £1,200 every single month for doing absolutely nothing, which has far exceeded my expectations. But saying all this, I'm not getting too comfortable, as I know the markets love to give you a kick in the nuts just when you're not expecting it. I'm sure there'll be some form of correction somewhere around the corner, but nobody knows when, how or why it's going to happen. So my plan doesn't change. Keep calm and dollar cost average. If you want more information about dollar cost averaging, then again I'll put a ribbon in the top right of this video. However, there is one change I'm making regarding how much money I'm putting into VWRL. After reviewing the pros and cons between overpaying into my pension versus investing, I posted a video sometime last week, so feel free to check it out. It has dawned on me that overpaying into my pension is pretty useless for me, as I'm actually looking to have the benefit a lot sooner than actually when I'm in my 60s. So based on this, I've reduced my contribution towards my company pension to the minimum I can without impacting how much my company then puts towards my pension, which is actually going to release me £190 after tax every month, which is going to boost my direct debit to VWRL by 30% in a month, which is actually massive. So it's going to move my direct debit to about £890. On top of this, I've actually just had a letter to say that my student loan should be paid off in the next 6 months, so I'll actually should be able to increase it further before the end of the year. So even with the market being overvalued, I'm confident in the stock market in the long term, and there's no better place for my money to be right now based on the risk tolerance that I have. That is a personal opinion though, so it's not financial advice. I am not a financial advisor. Holding any cash right now other than to cover emergencies, in my eyes, is insanity, but each to their own. There will be a point in the future where cash is king after a large crash and they'll be able to snap up all the very, very cheap prices, but that window is very, very small, and actually holding cash for a long time just isn't worth waiting for the dip. But anyway, that's just my view. Let me know in the comments below. What do you make of the markets right now? How are you personally doing? That's all for this video. See you in the next one.